Good afternoon, good morning, wherever you are, whatever the time of day is. Good to have you all on board. Before we start, I'm just going to give you some few housekeeping or Zoom keeping. Um, it is truly a global village. We are joined together in Europe, from Africa, and also from the United States or from North America. And our distinguished panel of speakers are also going to be from Africa, from Europe, and from North America. It's good that we are able to meet virtually online. And also, please keep yourselves mute in order for us to hear the speakers. Feel free to put your comments on the comment box, and please comment nicely. Be good to our speakers. They are distinguished, they are very experienced, and they are going to give you the benefits of what they have done. We've got quite a huge range of experience spanning over a quarter of a century. So keep your ears peeled for what they are going to say. This is a monthly series of economic sustainability events on Zoom. Today's focus is on public-private partnerships. As speakers, we take us on a journey, starting with Kede, the chair and the co-founder of Nigeria Business Magazine. And he will give us the opening remarks, and then he will be followed by Francis Owokede, Adesua Okumbo Rhodes, Engineer Chidi Izuwa, and Samuel Ogale Obo. And we'll then have time to ask questions, and then it will be a very interactive session, I can assure you. So I would like to welcome Kede Ahie, the chair and the co-founder of Nigerian Business Magazine. Kede.
Thank you very much, sir, and thanks to everyone that's logged in and is participating. I'm not going to take too much of your time. The only introductory word that I would actually like to point out is that we started this journey as producing a magazine and doing business events 10 years ago. So in October, it will be exactly 10 years that we embarked on this journey. And so far, it's been this is where technology. Can you hear me?
Yes. Yes, we can hear you.
I mean, phone calls are coming in, and so it's a bit disruptive.
Oh, yeah, busy man.
Yeah, so we started 10 years ago, and like I said, it's been a progressive journey. And when we started this journey, it was to really bring out the best that Nigeria could offer when no one was actually doing this. I mean, it was all despondency everywhere, but we felt that Nigeria as a country has a lot to offer, and we've seen it since 2010. Nigeria has a population, as some say, of 200 million people. I don't talk about the GDP to the extent that people do. For me, the GDP, I would say Nigeria is $1 trillion economy. The informal sector is 4 times the size of the formal sector. So when you have a GDP of about 400 million pounds, then it works out to $1 trillion economy, and that's a lot. And what is trending now, people say Black Lives Matters and all the stuff, but I think Nigeria surely has a lot to offer. And in this series, we talked about COVID, and COVID has been a game changer. Nobody expected it, but it's really transformed the way we do business globally. And Nigeria is not an island, the United States is not. So everyone is affected by COVID. And thankfully, with this series, we are going to be addressing different sectors. And today, I believe we'll be talking about really PPP models. And I don't want to go into details of the speakers. I have looked at their profiles, some I know personally. The only person I haven't really spoken to until last night was Samuel Obo, who's based in Canada. But I think this will be one of the very good series that will affect those who are in business, those who want to do business in Africa, so that they will have an understanding of what is required. So let me quickly just say thank you for everyone that's turned up, all the speakers, especially because it's not easy when you are asked to speak short notice. It takes time. So we really appreciate you coming on board. And our brother in Canada, the time difference is quite 7 hours. So it's really woken you up quite early. So I hope and wish we have a very productive session. And thank you very much.
Thank you, KD. I would like to welcome Francis Owonkede, the Managing Director and the Chief Executive Officer of NPA Advisors. Francis has 25 years experience as a finance lawyer and a specialist in debt capital markets, securitization, structured finance and project finance. He's the former head of banking and finance at the London office of Canadian law firm Fasken Martineau, and previously held in-house counsel position as an investment banker in major international financial institutions, including the Bank of Tokyo, Mitsubishi, Morgan Chase Bank, and UniCredit Bank. Welcome, Francis.
Thank you very much indeed. That's very, very kind. And in fact, it gives my age away, because that's about 5 years old. So, for the sake of full disclosure, I should actually say, ladies and gentlemen, that I'm also a partner, and I head up the structured finance and Africa practices of McCarthy Dennings, which is a UK law firm. But I am wearing my hat as a financial advisor, as the managing director and CEO of NPL Advisors for this afternoon's talk. Now, I was asked and tasked to basically put this seminar in context. So pardon me if it's going to sound a bit simplistic, but I'm going to do essentially 3 things. Explain what is PPP, because there's some of those who have just joined who may not be familiar with the term. I shall then give an example, a working example of one which we're actually currently engaged in sub-Saharan Africa and in Nigeria in particular. I will then explain a little bit about the stakeholders who are involved, and that would hopefully be done to show the challenges which we've seen so far in the light of COVID. I will then conclude with some comments and as to how to actually make a PPP successful under these challenging times. So without further ado, what is PPP? PPP, Public-Private Partnership, or P3, or 3P, depending on what jurisdiction you are from. If you're from the UK, you say PPP. The Canadians, I know, say P3. Nigeria, we say all of them. It's really, as the name suggests, it's an alliance, a venture between the public sector, usually a government-regulated body, and the private sector, where a project sponsor aligns or gets the public sector to invest in a particular infrastructure project which is being done. Now, these tend to be large infrastructure projects, and they tend to be in the sectors such as aircraft, transportation, shipping, where you need relatively large amounts of money, and you need the government to commit in some way, shape, or form into the venture. Now, let's take an example. We were mandated last year by a consortium of American and Nigerian project sponsors to find the financing for the rolling out of an MRO facility in Nigeria. Now, for those of you who do not know what an MRO stands for, it means maintenance, repair, and overhaul. Now, what that is you may have been taking off from, I don't know, Heathrow Airport, or indeed any other international airport, and you see quite a huge building where planes actually are parked. What that is a maintenance and repair overhaul facility. And what happens there is basically that aircraft are maintained, repaired, and in some cases are overhauled. Now, in the case of Africa, there's only one, which is in Addis Ababa, in Ethiopia. So bringing this out in Nigeria will not only be such a significant thing for the Nigerian context, but indeed it will be a groundbreaker for the whole of Africa, because it would mean that we'll be depriving or we'll be shifting some of the flows which are currently done in Addis Ababa, in the United Kingdom and the United States, where aircraft are flown to maintain and repair their aircraft into Nigeria. This is quite a big thing. Now, we were mandated in the autumn of last year, and we were meant to start constructing. In fact, we were meant to complete the construction of the facility in September. It's now August, and obviously we have not done so. What have we actually done to date? We signed the Memorandum of Understanding, MOU, between the stakeholders. And again, this shows the parties who are typically engaged in a PPP. The stakeholders being the aviation company, or the aviation side of the government, the aviation wing of the government, the company which is in charge of the aviation in a particular state in Nigeria. They're responsible. They actually participated in it. And also there was a project sponsors as well. There are also other third-party service providers, such as lawyers, accountants, and technicians, who are also obviously involved in giving the various technical reports, the legal reports, which are also required, present at the signing of the MOU. It was duly signed in September, and as I said, building was meant to have commenced and indeed be completed by this September. Now, what we have found so far is that the intervention of COVID put a huge spanner on that. From little things such as meetings, the minister couldn't actually get in time because there was lockdown. So none of the meetings which were scheduled to occur took place. The ramifications of that is that without the meetings having occurred, you can actually have the next stage, which are the contract being signed, which is we need the next stage, which is the technicians being actually brought in to actually construct the site itself. Has this meant that the project is dead? No, it hasn't. What we have managed to do under these circumstances is to literally try and work within the ambit of what we have found, so that in the case of the minister being unable to actually execute the necessary agreement, this had to be done online. But it took time, and that's the thing, it took time to actually get that in place so that the minister could actually sign that on time. Don't forget, as the COVID occurred and the lockdown phase came, we had to put in place safe means of working that enabled, in this particular case, the minister to be able to sign the document electronically. All of that was not done, all of that infrastructure, soft infrastructure, had not been put in place. So such a small thing as setting up meetings to the financing. We then come to the investors. The investors who are largely DFIs, who had nodded very, very beautifully nodded, said, We know this particular transaction. We know this particular region in Nigeria. We know this state. We know this hangar. We think it's an excellent idea, not only because it will bring fresh money into Nigeria, not only because it will actually mean that Nigeria is a game changer in the aviation industry globally, but more importantly, of money moving forward. Because think about it, once the hangar has been built, it means that quite a lot of other aircraft will be coming into the region, which means that you need added facilities for the expanding business. So it meant more development of housing to house personnel and staff who are coming in, which would mean more infrastructure, road infrastructure being built, which would then mean more work, more inflows of foreign investment. So it was a win-win scenario. But suddenly, 6 months down the line, we had this same DFI who had been smiling to me and smiling at us and signing it off, saying, well, things have changed. There's COVID. We do not know with some reason. I mean, they say, well, how do we know that all these planes are coming? Can't you see, Francis, there's nobody flying? And with justification. What do you say to that? However, the thing to say to that is that not to say, no, there's not going to be any more flights, but let us see how things are going to be planning out. It is not going to be the case that there will never be any more flights, but it will have to be done in a safe way. And fortuitously, as things will be seen now, especially in Europe, where there's an easing of traveling regulation, we have found that there's now there's more willingness to actually look at this, at fares be made, money be made from traveling, and there's some comfort in investing in the aviation industry. Now, that trickles down into the information package and the financial models which had been done right from the outset. We had actually carried out some projections and stress tested them as well on the viability of various aircraft using the MRO facility in southern Nigeria as a test case. And we have found that in our stress test, we actually saw that even to the extent, even if there were about 3 or 4 airlines flying into Nigeria, that would be sufficient to actually pay for what we're asking for. We never envisioned that COVID would be a situation where there's absolutely no traveling at all. So that was a groundbreaker for us. But what we've had to do is we've had to go back to our financial models and tweak them to the extent in which saying, well, okay, we know that COVID is now happening. We know that there's currently a ban. How long is there going to be a ban for? How long is it going to take for domestic flights to start? How long for international flights to start? And then how long will it take for airlines to start flying into Lagos? And revisit our model. That then leads to pricing. And we had to be very, very realistic in pricing as well. Because obviously pre-COVID, we have been very, very optimistic because we just basically looked around the world and said, there is an MRO facility, this is how much they're getting, this is how much Addis Ababa is getting, this is how much Heathrow Airport is getting, this is how much JFK is getting, this is how much India is getting. We believe that we can actually do X, Y, Z. But with JFK and every else getting 0, 0, 0, it becomes very difficult to actually predict what you have to do. But that exercise has to be carried out. And that then gets reflected in the pricing as well. So the pricing has obviously been at an upward trend. So we're not going to be getting the same competitive pricing which we had pre-COVID. Now, I'm just conscious of time. I think I have about 2 or 3 more minutes.
Yeah.
I was asked to say, well, a few words about what will make it more successful to actually close a PPP under these scenarios.
Yeah.
On what we have learned on so far and our experience in doing, again, this is just one simple PPP which I've talked to you about. We're engaged in 6. Number of things which I hope my colleagues will pick up, in particular Chibi will pick up when they actually do their own talk. I think it's important that the information package which any project sponsor prepares. And don't forget, the information package comprises of the information memorandum, well, a teaser right from the outset, a teaser of a project or the PPP. The information memorandum and the financial model must be of excellent international standards. You can't afford to fluffle on that. You've got to have accurate information. You've got to have accurate financial models. You've got to stress test your financial models. Because what we're finding now is that investors are basically looking at your financials and basically saying, how has COVID impacted on this? We want their half-year financial statements, which shows what has happened in the event of COVID. How has this impacted on their balance sheet? How has this impacted on their cash flow projections? Without knowing this, I'm not going to give them one kobo. That's extremely important. The other thing which I think is also important to realize, and this is where government and Chidi in particular, and those around, in government should bear in mind, is, and especially in the case of Nigeria, where we have the indigenous law of 60-40%. Given the high pricing and given the fact that it's very, very difficult to find investors to invest in Nigeria, invest indeed to part with their money under this COVID scenarios, is it really realistic to expect somebody who is willing to invest 90% or sometimes 95% of the debt element to only have 40% return? I think that the government should actually be a bit more realistic and pragmatic in this this local context issue, and should be prepared to actually move from 60-40 to perhaps 70-30, 60, 50-50. But we have a foreign investor who is willing to invest up to 90%, 95% of a project. It seems to me, under these present circumstances, where it's so challenging to have an investor to part with their money, it is unrealistic to expect 40% return. And lastly, when it comes to closing these days are very, very different from what we experienced in pre-COVID. Nobody wants to come and shake your hands. I don't want to shake anybody's hand, and that is a blessing and a curse. It is a blessing in the sense that it focuses the mind now on electronic closing, so that money moves much more quickly and much more efficiently, and we spend less time in all the fluffle of meeting with a closing sort of meeting, which we're used to, which again is to a certain extent a waste of money. And investors are looking at it and saying, well, hang on a minute, do I really need to actually go out to a closing ceremony? So without further ado, those are the three things which I think are important. Again, information, clear, precise information package from project sponsors. Secondly, a more realistic approach as to risk and reward, especially on the side of the government. And thirdly, a more focused attitude towards closing, a more focused and tight attitude towards closing a particular transaction. Thank you very much.
Thank you, Francis. That was great. Francis talked about a lot of things. He talked about pre-COVID and during this COVID and after COVID. And three things that he said is that we need to be clear in terms of the information that we put out, that you've got to stress test your financial models so that you can adjust whatever the situation, particularly now. And also he said that it's unrealistic in terms of what to expect when investors are ready to put in 90 or 95% of the investment. That is a challenge for you, Chidi, when it comes to government regulations. And also in terms of that, there's a need for more focus and time. That times are different now. We need to make our projects lean and agile. And COVID, it's a kind of gift. What you would have done before, traveling and wasting money, you can do it more effectively, even virtually. So there are so many things for us to look at and think about. So I'm going to call on, thank you again, Francis, that was great. I'm now going to call on Adesua Okumbo-Rhodes. Adesua has 12 years of investment banking private equity and structured credit experience in developed and emerging markets. Adesua is the founder and the managing partner of Arua Capital Management, one of the few women-owned and led private equity funds in the continent of Africa. She's also the co-founder of Syntactus Capital Africa and currently sits on a number of boards in Nigeria, including Welsosa Greenhouse Farms and Wells Carlton Hotel and Luxury Apartments. Adesua, you're welcome.
Thank you very much. Thank you very much for the invitation to provide some thoughts on this very relevant topic. And thank you everyone for your time. So as she's mentioned, I'm the founder of Arua Capital Management. We are one of the few growth equity, private equity funds in the market, specifically focusing on businesses that are either providing goods and services to women or employing women through their workforce on their value chain. So I'm coming from the private angle. I'm a private investor looking to invest in private companies. So I'll be talking about the second P in PPP and talking about access to capital for private companies, how they can, get capital from investors like us before they start even thinking about potentially partnering with the government or thinking about, establishing those relationships. So for us, the opportunity that we see and why we're very, very excited about the Nigerian market and the opportunity here is there are a lot of viable businesses, either with, across sectors, within agriculture, within healthcare, within education, a lot of viable businesses that are looking for access to growth capital. So the stage that we're financing is we're financing.
Please, can you mute yourselves? Thank you. Sorry.
The stage that we're financing is companies that are already established, companies that they've proven their business model, but they're looking for that, that scale up capital. And there are a lot of viable businesses within this segment where, the banks are not providing patient growth capital. So the banks are providing capital that is typically, short term, interest rates are very, very high. So after you've paid interest, after you've paid principal, there's not much room for growth. So we're looking to provide alternative financing options to these businesses through the patient growth equity that we provide. Also, there are a lot of private equity funds in the market, but a lot of the private equity funds in the market, they're looking for much larger transactions. So we estimate, actually based on our own market research and our own top-down analysis, we estimate that there's currently a $58 billion capital gap for companies in Nigeria seeking capital. And the way that we've extrapolated this is, we've taken the World Bank data, where in Nigeria, when you look at the bank debt that's provided to the private sector, it's only 14% of GDP, 1/4. When you compare that with some of the G7 countries, in the UK, it's over 150%. In the US, it's over 190%. The G7 average is around 130%. And in Nigeria, we're only at 14%. So we really need companies like ours, aside from the banks, we need companies like ours that can provide alternative patient growth capital solutions for private companies so that they have alternative financing routes over and above just the banks and over and above just internal capital and family and friend capital. So for us, plugging that huge 58 billion financing gap is something that gets us excited, because there are a lot of, there are a lot of interesting things to be done in the Nigerian context across sectors. And for us, I can give an example of an investment that we've done in Nigeria. So for us, we made an investment in October last year in a company that is locally manufacturing personal hygiene products. So they're within the healthcare vertical, which is obviously very, very relevant in this COVID environment. But they're locally manufacturing sanitary pads, baby diapers, baby wipes, underlay pads that mothers use in hospitals, net maternity pads, adult diapers. They just commissioned the first adult diaper in the whole of West Africa. So that company, because we have a local manufacturing presence, in this COVID environment, we've actually seen our sales rapidly increase. You know, we saw sales in July be the highest monthly sales figure that we've seen for a long time. So it's being able to identify these types of businesses where there's an import substitution is something that is a very, very interesting theme, where even in a Naira devaluation scenario, you're still able to protect your margins, you're still able to, you know, grow quite substantially. So we're looking for pockets of, you know, those type of investments where we can provide alternative, you know, growth solutions to businesses like this that are within, you know, strategically placed within value chains such as healthcare, such as agriculture, such as financial, you know, non-banking financial services, financial inclusion. And the private sector really has a massive role to play even before the government gets involved. So the first thing I'm talking about is, you know, this funding challenge. The second thing I'm going to talk about is how can you access capital from investors like ourselves? And for us, you know, the things that we look at is very, very similar to what Francis, my fellow panelist, just mentioned, is, you know, we want to make sure that the businesses that we're supporting, they have a strong information package when they're coming to us and seeking capital. So how, you know, have you thought through in depth your business plan? Have you thought through in depth, you know, what are the different cases you're running on your financial model? A base case, a downside case, a COVID case, an upside case. You know, you need to make sure that your financial model is not just revenue, but also what are the drivers, what are the KPIs that you're measuring for your business. So something that we always say to our entrepreneurs is, you can't grow what you can't measure. So always making sure that you have relevant KPIs, relevant drivers of your business that you're keeping track of, so that investors can understand your business model very, very quickly when they see your information package. So I think for us, when we look at a lot of the requests for capital that come to us, something that we always want to see is, how is this management team thinking through the KPIs of their business? Because I think a trap that a lot of entrepreneurs face is they just think revenue. They're not thinking drivers, because revenue is great, but in order to sustain the bottom line, you need to think about what is actually driving your business. What is the gross margin per SKU? What is the gross margin per segment? So really drilling down into specifics. And if we're able to see that without asking for it, then that's something that we like to see. We like to see that there's depth in the management team. We like to see that there's depth in the finance function. We're not interested in backing one-man shows. So having depth in the management team is also something that we look for when we're investing in companies. And also something else that we also look for is, we want to make sure that businesses, when they're coming to us, they know their target audience. So do a little bit of research on the investor before you send us your proposal. You know, if someone is sending us a greenfield project, for example, unfortunately, the fund that we have right now, we're not investing in greenfield projects. So do some research on the investor before you send that email, because it also bodes well for future conversations. So I think that's what I would say is, you know, we look for, you know, we want to make sure that the information package is good. The business plan is robust, and they've thought through drivers behind revenue, drivers behind cash flow. There are the different sensitivities across performance. And then we also want to make sure that the businesses that are requesting for capital, they have the depth in the management team. It's not a one-man show. You know, they're already thinking about corporate governance, succession planning. These are the types of things that we want to see. And also, thirdly, you know, and this is just, you know, a little bit of advice, do some research on the investor, because it's when you're able to know your target audience and know what makes that investor tick. As you're pitching your idea or your business, you can point out things that you know that are important to them, which will bode well in your pitch as well. So for us, we see access to capital as a major challenge, and we're playing our small role in the ecosystem to make sure that private companies have alternatives, financing solutions, just over and above just what banks are providing. We're providing patient growth equity to businesses, and we think that that is also a key part of ensuring that the PPP ecosystem is one that can thrive, making sure that private companies actually have access to capital, because we want to be able to de-risk these businesses and these projects before approaching government. So that is me. I don't know if I have some more time, but I'll stop there, and I'll be very happy to continue the discussion and take any questions. Thank you very much.
Thank you very much. That was great. 58 billion capital gap. That's huge.
Yes.
And also, you've talked about a lot of interesting things, that you can't grow what you cannot measure. If you're looking for capital, think drivers and not just revenue, and have a depth. Pull down, be very clear in terms of the specifics. You would like to see a depth in the management team. So the business plan, the package needs to be good. The governance arrangement needs to be kosher. And what you are saying is that you are helping grow the market for women. You're also helping grow the market as an alternative to banks. You are providing capital, but in providing capital, you are not giving it away like that. People have to show what they have. And you are not currently investing in greenfield, but you would like to see companies who have actually done their research and put their information the right way. Yeah, thank you very much. I would like to now call on Engineer Chidi Izuwa, who is going to look at the topic from a regulatory and public sector lens. Engineer Izuwa is a former university lecturer in fluid mechanics, fluvial hydraulics, and hydropower engineering. He has held several senior oil and gas asset management positions in a career spanning over 21 years with SPDC and Shell International. Engineer Izuwa is the Director General and the Chief Executive Officer of the Infrastructure Concession Regulatory Commission in Nigeria. He's currently the chair, and he chairs the Presidential Committee on Infrastructure and PPPs and the Nigerian Society of Engineers. So, Engineer Izuwa, welcome. Unmute yourself, please. You have to unmute, yeah.
I have done that. I mean, we can spend a week talking about infrastructure, and we're not going to finish because of the challenges we face. So how much time do I have?
You have 15 minutes.
Okay, now, what I would do is, I'll probably try to do 4 things, very quickly. The first one is to talk about what's happening now. And I think because of a bit of what I've heard, it's extremely very important to establish the legal and regulatory framework for PPPs in Nigeria so that we have a common understanding of what we're doing. Talk about the things we have done and what the future, looks like. I don't want to go into the deficit and how much money is needed and all of that stuff, because we all see it. I mean, we feel the deficit of infrastructure every day in our country. In fact, there's a place His Excellency the President talked about. He said, if we don't kill corruption, corruption will kill Nigeria. Then he asked me to speak. I said, Your Excellency, I agree. If we don't kill corruption, corruption will kill Nigeria. But also, if we don't kill our infrastructure deficit, the deficit, in fact, is already killing us because people don't have, I mean, you have people having surgeries, power goes up and somebody dies. So it's just to sort of put things for you. But just to, I mean, there was a very interesting seminar we had yesterday, and I've sent the YouTube, clip to Kede, and I think you can share it through your network. The work we're doing about debt capital management, trying to establish, a local debt capital market in Nigeria to fund infrastructure. We also discuss a lot of these issues. So it's something that people will gain a lot of knowledge from watching. Then secondly, I mean, for those who are interested in doing PPPs in Nigeria, the NNPC, we've been working very closely with them. The NNPC just this morning advertised our pipeline network and depot, for pre-qualification for public-private partnerships. We're going through the first phase of it. So people who are interested, I've also sent the ad back. It's in today's Daily Trust in Nigeria. I've sent it together, also share. The copy I sent is not a very good one, but I'll try and send a better copy so people know that things are happening. But just to sort of step back a little bit, I'd like to talk about the regulatory framework. The framework for PPPs in Nigeria is principally around the ICRC Act and the national policy on PPPs. And of PPPs, we see a public-private partnership as a contractual agreement. Mark that word, contractual agreement between a public agency, federal, state, or local, and a private sector entity. Through this agreement, the skills and assets of each sector, public and private, are shared in delivering a service or facility for the use of the general public. In addition to sharing the resources, each party shares in the risks and rewards potential in the delivery of the service or facility. This wasn't a natural definition for us. It's a definition from the National Council of PPPs in the US, but because of its holistic nature, we basically adopted it. Now, PPPs in Nigeria, go through the national policy defines a framework that involves development, procurement, and implementation. So every PPP in Nigeria would have to go through largely, those three processes. When you develop it, you have a bankable business case. So you convince yourself that for this particular venture you have, if you go out there, you would have enough information in your data room to demonstrate to the private sector that this is a viable business opportunity. If you bring in capital, to develop this service, the revenues will be sufficient to pay both debt and equity and provide, returns, to the investors. Now, that's the beginning point. You've got an OPC, which the ICRC certified. Then you go through a competitive procurement process that tries to drive value for money. And then once you finish that particular process, you prepare what is called a full business case. That full business case by law has to go to cabinet for approval. It's only when a PPP, the contract agreement and the full business case contain the is approved by cabinet that you're able to get into a PPP. Something that doesn't go through that process by our legal framework does not constitute a public-private partnership. That's a very important thing, to be very clear about and understand. We also allow people to put in what is called unsolicited proposals. And in fact, in our framework here, in terms of the guidelines we are using, we have moved away from playing the unsolicited. Because when you say something is unsolicited, it has a bit of some sort of negative, connotation as if it's an unsolicited telephone call or stuff like that. We call them privately initiated infrastructure proposals. That a private party goes somewhere, sees an opportunity, and makes the proposal to government. Now, what that process requires us to do is that government will, the primary thing there is that you demonstrate that you've developed this opportunity, there's a bankable business case, government looks at the viability. If government accepts that a viable thing, then you get an option of first refusal. It is taken through a switch challenge process, which is competitive, and then basically makes that process compliant with the law. However, into that process, the original proponent has the right to match any competitive offers if it's not the most competitive. Then that still goes to cabinet for approval. That process is very, very I really would not like to start, a discussion by contradicting what another panelist has said. But this is extremely very important because this is part of the reason why Nigeria would have a bad name somewhere. I think Francis talked about an MRO and a minister signing an agreement and an MOU and stuff like that. I'm a bit worried, Francis, and I think we probably need to have a chat after this because that's not the process for PPPs in Nigeria. And what would happen is that once this MOU and agreement is signed, another minister comes in and says, no, I don't know anything about this. This doesn't comply with the law. And then our country will have a bad name. So, I mean, what I have here, and I think I can share, this is the court process of where we've gone to do exactly the same thing here. So please, for the MRO, there's an aviation set of projects in the aviation sector. Is the MRO, the aviation leasing company, the concession of the airport terminals, cargo terminals, and I know what stages where they are. For the MRO, we have basically the MRO, there is a completed bid that is out, where people will go through that process. So I think that, the question is that it's actually very important that whatever we do complies with the law so that you have the full faith and credit of the Nigerian people behind that transaction. And if anything happens, that transaction has the full backing of the law. So I think that we probably need to have another, people are very welcome. I mean, like you said, the only MROs in Africa is in Morocco and in Addis. And it's a very expensive thing because of the D-check requirements. You can only do ABC checks in Nigeria. You cannot do, and those things are very expensive. It costs about half to $1 million for every airline to do. It's very expensive. So it makes a lot of sense to have an MRO in Nigeria serving the West African region. But if you want to do it as a sole risk investment, you do it like that. But if it is got to be a PPP, it's got to follow the PPP framework. So that's about that. But looking at what, the landscape for PPPs, I would recommend that people find time and go to the ICRC website, www.icrc.gov.ng. If you look at that, go to our PPP disclosure portal. We are the first country in the world, and the World Bank is recognized us to have a PPP disclosure portal. So everything about our PPPs, the contracts are fully well disclosed on that particular. And you will see we currently have about 70 transactions, which are running as PPPs, approved by cabinet, validated and running, very, very well. A good examples of them is like our port terminals. 26 of our port terminals are public-private partnerships, concession to private terminal operators. And I mean, the success has been unbelievable. It's not our ports are perfect, but we have problems with the ports, but they have to do with, common user infrastructure outside the ports, access to the ports, but not in terms of what the concessionaires are required, to provide. We also have the three hydro power plants, ING, Deba, Shiroro. Those are, concessions. And a number of other, facilities are called. I mean, a good one that we have done, which Nigeria has done, that no one else is doing. I mean, normally, social infrastructure PPPs are done on annuity. Garki Hospital in Abuja here is a concession. And it's probably the only concession in the world that is on a user fee basis. Because of the fiscal space that government doesn't have, government is unable to pay because if you go to the UK, you got PFIs, for hospitals and everything, and then government pays availability payments, on a facility basis. But here, this is a concession that runs on a user, the only one of it anywhere in the world. There are lots of other, transactions that being run, like that. What is the future for us in PPPs? The future for us is that Nigeria has got a massive, infrastructure deficit. And we are just about starting the Highway Development Management Initiative, where we're going to be concessioning 10 of our roads, to the private sector. That particular process is ongoing. We're concluding the business case. Once it's concluded, we will go through a competitive process that will, those concessions will depend to get their revenue, both on tolling and also land value. So we're looking at a well spread. So it's all part of the business case that we have done that mitigate the risk of that transaction. You're looking at the diversity of sources for revenue to make. One of the recent things that we have done is a Lake Deepwater Port. Lake Deepwater Port is a very successful private partnership approved by Canada. That is $2 billion of investment coming in.
You're getting a bit. We can't hear you. It's getting muted.
No, it's not.
We can't hear you if you can. Yeah.
Can you hear me now?
Yes.
Okay. I think there's something with my microphone in terms of.
So you have to stand where you have to speak Stay where
So
you
I
are.
have to face it to be able to. I should have used my super duper computer. I'm sorry about that. So I'll
That's
try
better.
to.
Just like that. Just like that.
Yeah. Okay. So if you look at Lekki Deepwater Port that we have, the things that we have done with Gurara, Gurara Power Station, so there are, I mean, just to give, we have, but the key point to note is that what we have done is not enough. We still have a huge infrastructure deficit. And I think the other point I also want to make is that what ICRC is doing is also focusing on federal infrastructure. So a lot of effort is being made by us to sort of draw attention to state infrastructure, to draw attention to local government infrastructure in terms of what will, I mean, like something like primary health care. One of the initiatives we're driving now is the use of mobile medical clinics on a PPP basis to improve primary health care across the country. So you're going to have it. This has been worked very successfully in India. So we're looking at, replicating that model in Nigeria. And what I keep saying to people that if we had this 5 years ago, we will certainly be in a better place, to deal with COVID-19. Because what happens is that very rapidly, working with the private sector, you could transform those things into COVID, testing centers. And the sort of low testing figures you have will not be here because we would be able to spread COVID testing around the country and have better control, on what is happening. We're also looking at students' hostels. We've just had the first approval for student hostel PPP in Kaduna Polytechnic. So that is something that I know many of you went to your universities in Nigeria. You don't want to go to the hostels where you spent, you don't want to go to your hostels in Uniben. You don't want to go to your hostels in Nsukka. What they look like, you won't put animals into them now. But people who would rule Nigeria in the future are required to do that. So we're working very hard with the Federal Ministry of Education and the National Universities Commission and the individual universities to bring in private capital, because that's a very bankable transaction, that you can bring in private capital and work. So across social, across economic, across the various sectors, Nigeria is a very attractive, venue for PPPs. But we do have a few challenges. One of those challenges we have is the time. There's a time issue because we have left our infrastructure, deficit to pile up too much. You require time to do, a bankability study. You require time for a competitive, because people comply with, Equator principles. No lender, will lend you money when it is not sure of the procurement process and the governance principle, just like Adesuwa has said. So to set up all of that and do it properly and create a transaction that meets international standards requires time. The point is, if you're telling somebody whose road is very bad that you require 1 year to do an investment-grade traffic study, is he going to listen to you? If you tell a politician who has only 4 years that you require 5 years to procure a PPP transaction, is he going to listen to you? So that is one area that we need to do. Another area we need to do is also the lack of, capacity in the public sector. Experienced, knowledgeable people. PPPs are complex, legal, technical, financial arrangements. They do not very easily amend themselves to self-help. It's not something you can do under the corner. I mean, you're competing with investors who have gone to Harvard and anything. You must meet those type of standards. So what we have done in ICRC is that we have established the Nigeria Institute for Infrastructure and Public-Private Partnerships to rapidly spool up the skill and capacity of public servants in Nigeria and also the private sector, for PPPs in Nigeria. Another big issue we have is also project development funding. Trying to carry out bankability studies is very expensive. And we don't really have a project development package that is able to do. So we're looking at how to solve, that. We also have issues with contingent liability and our sovereign rating, and also the total lack of long-term tenure financing in Nigeria, because, it's not, I mean, when you look at things like airports and port infrastructure that earn revenue in foreign currency, it's not a problem to borrow FX to do those infrastructure. But if you're looking at roads, hospital, where the revenues for the investor comes in Naira, if you bring in the money from outside, then you're drawing huge risk in terms of FX. So we need to make the effort to develop our own debt capital market so that we can use Naira to finance our infrastructure. We need to deepen it. We're not going to finance infrastructure with 90-day money in the bank. We need to create that ecosystem. I think that is the key word. There is a lot of effort that ICRC is doing to create an ecosystem that can power PPPs. There are no limits to what an investor can do, because that is why these things have to go to council. Because once it goes to council, and because everything has to go to council, the investment required, the returns and everything. So once it's approved by council, it is cast in stone. And nobody can, if you look at the ICRC Act, the ICRC Act is very, very clear about the sanctity of contracts, for PPPs in Nigeria. So whatever, I mean, the returns will go to cabinet. It is left to cabinet to say that the return is too much or not. So once you have that, you have the protection of the those are really the few points I wanted. The last point I just want to say is that we have not developed a framework for emergency PPP. So some of the PPPs we require in Nigeria will not take the time that you require to develop a normal PPP. A good example is we are working with the Presidential Task Force on COVID-19 to establish rapidly, COVID testing at airports in Nigeria. If we don't do that, we are going to be unable, to allow international flights in Nigeria. This is going to be a PPP. We don't have months to do it. We don't have years to do it. We only have weeks to do it. So it's a tough for us to be able to do that and still tick all the boxes that you're required to say that this was a properly done PPP, approved properly, it's able to raise the capital to do it, and provide a quality service that creates comfort in Nigerians that if people fly into Nigeria, they will be tested properly to demonstrate that they are not COVID infected, and then everybody feels comfort to travel to the airport. So those are a scenario of things that we're doing to drive. Without infrastructure, like John F. Kennedy says, he says, America has good roads, not because America is rich. America is rich because it has good roads. Without infrastructure, our country is going nowhere. So infrastructure emergency we have is something that all of us need to put our effort on. So,
thank you very much. A few things to really think about. What you said is that things are going on, but there are quite a few that is very attractive. The market is very attractive in Nigeria, and that we are ready for PPP, but there are challenges with time to do bankable projects or bankability studies. That you've got, Nigeria has got a massive infrastructure gap. We don't have enough, we still have a huge infrastructure deficit. A lot of work is being done to draw focus on infrastructure using a model from India. And you gave an example of student hostels, that there is viability in that. You also talked about a lack of capacity in the public sector, that you've established an institute for public servants in Nigeria. That there's also project development funding. There's a challenge with that, and that there's lack of long-term tenure financing in Nigeria, but that we should make efforts to develop funding in-house and to develop an ecosystem. I think there was some kind of a break in communication when you were talking. You also talked about something about development of a framework. Quite a lot of things to talk about, and I'm glad that we have different speakers speaking from different lenses. Nigeria is huge. There's huge population, infrastructure. There's deficit in infrastructure. So the market is huge. However, there are challenges with bankability, with research. So I will leave that. I'm sure there will be a lot of people that would ask questions, but I'm going to call on the next speaker, Samuel Orale Obo, who is going to talk about nuances and nudges, nudging economic sustainability and stewardship in Nigeria with cues from Canada's architecture. So he's going to be talking from implementation, actualization, and PPP projects from an architectural lens. Samuel is going to give us a presentation. I will welcome Samuel now. Before I welcome Samuel, Samuel is the Vice President of Insight and Architecture. He has an expansive career spanning over 25 years in the built environment, and is the first African Canadian to be elected as president of the Alberta chapter of the Royal Architectural Institute of Canada. He's also a former VP at AECOM Canada Architects Limited, a Fortune 500 company, and president in 2015 of the Royal Architectural Institute of Canada and a recipient of the Presidential Medal and Distinguished Fellow of the American Institute of Architects. Samuel, you're welcome.
Oh, thank you very much. And first and foremost, I'm not a finance expert. I'm not, into PPP, and I thought I'm going to be talking about, very interesting examples, with cues from, architecture. So the first thing, I want to do is, just to not to repeat what my my fellow panelists have said, but to go straight into, into some of the aspects of this, because there's no much time. I'm going to be focusing basically on some of the nuances that makes PPP a success, but without necessarily going into the technicality of PPP, which other people have addressed. I mean, in Canada, we call it P3 projects. I'm not going into that details, but to actually look at some examples of strategies that led to various kind of success. So as I mentioned, earlier, there are a few, disclaimer, right, that I would like to talk about. And this, these disclaimers are definitely, something that is very important, just to be very straightforward in terms of what we're giving out. Architects do know one or two things about sustainability, about excellence in design, and how to enhance quality of life. But I have, like I said earlier, I'm not a finance expert. I'm neither an expert in stewardship matters or behavioral sciences, which I'm going to kind of talk about. Stewards, I'm actually glad, some of the things that Chidi had mentioned. Chidi had mentioned some things that borders around stewardship, and I think it's really very, very important, to look at that. As architects, we have a lot of experience to share with people. Just take a look around, some of the inspiring buildings around the world that has been created. And then, secondly, the views and analysis and opinions expressed here does not necessarily, is my views and my opinions, and do not necessarily represent, any agency or, featured entity that I may be talking about. And thirdly, because this is a sophisticated audience, as Kede and Esosa had mentioned to me, I hope, it is harmless for me to make some two basic, assumptions. And, some of those, assumptions are, before I kind of, proceed further, the first assumption is that we have an audience, experts, right? That is knowledgeable about African matters, and also that Nigeria has vibrant, creative, and resilient people, right? And we're also aware of the antecedents of, governance, right? In Nigeria. And then the second thing is, I'm hoping that, the audience have actually encountered similar quality of architecture, that we have in Canada here, and hopefully on a profound and intimate level too. So, by personal and intimate architectural encounter, I'm actually referring to experiential awe. Chidi talks about infrastructure deficit. Infrastructure deficit is also a problem here in Canada. But one of the things that, we actually deal with, we look at the qualitative aspect. Chidi, Adesua, and also Francis actually talked about what we will call quantitative aspect, things that you measure quantitative, but there are also the qualitative aspects, of some of the things that we do. And things like experiential and or inspiration, right, in public facilities, the idea that, good design has to be used for all that is really very important and very instrumental in the long-term viability of such a project. And when it comes to P3 and PPP, the viability is really very important. So I really want to focus on that aspect, just a very small significant aspect that we use to create, something that is very inspiring. And most times we really talk about, intimate, and personal, even though they are public facilities. And when I talk about that, I'm not really referring to the colorful interpretations some adventurous mind might ascribe to the ambiguous terms, like personal and intimate. And I'll say we should go easy on the Marilyn Monroe kind of thoughts, which, by the way, we actually do have a project like that in Mississauga, near Toronto, which is almost like a P3 project, that was done there. And it's something that is awe-inspiring. So just as a kind of context, right, this is probably what I think a lot of people believe Canada is like, right? It's always cold and wherever, but it's actually, is a land that is full of a lot of, P3. This is actually an interesting project that was done way back, right, in the 19th century in Banff, which was actually done through a public-private partnership through some of the rail line CP rails, right? It's a hotel, it's the Banff Springs, hotel. And diversity really matters to us, right? In Canada. And this is a good example for Nigeria where diversity is seen as a negative. Here in Canada, we are strong, not in spite, but because of the diversity of our heritage. So we have people of various backgrounds, various tribes, various aspects that that makes it interesting. And some of this diversity, right, is expressed in our culture. It's expressed in different ways where we know that diversity matters. And I just want to lay a lot of background. I'm not going to go into the technicalities of P3, but to leave everyone with a concept, just a very small, minute aspect of what we've done, right? That is distantly related to P3, but essential to the success of the P3s that we've done. So expression is really very important, and similar to the richness of the expression, that we have, in Canada, we have various types of expression. They're verbal, linguistic, you can name it, all sorts of jargons and cliches. And from a stereotypical point of view, if I'm allowed to gamble, many in this audience may not be able to relate to a mathematical expression, which is a finite combination of symbols that is well formed according to the rules that depend on the context. Of course, this is definitely, a type of expression, but there are also facial expression. And when you talk about facial expression, right, is an aspect, that is enthused with diversity, right? And it's definitely something that we are all very used to. Don't look too far. If you want to understand facial expression, you look no further than our former first lady to our southern neighbors, right? What a facial expression can mean. But there's also political expressions, and activism, right? Which there's a lot of them. There's expression, when it comes to fashion expression. I mean, Nigeria is actually the home, right, to all that. And you can name it. And as long as we humans are concerned, the varied expression, and as architects, we tend to have that kind of expression, when our fees, right? And when we're not able to get our fees paid, or when we're old and all that. Now, with all that said, right, why am I talking about expression? It's something that we use in architecture a lot. Expression in architecture is really very important, and it's used to actually share some of the communicative, attributes. And architecture is an expression of values, and it's used to communicate memory, but it can also communicate value and sense of place. For every P3 projects that we do, this is actually very important, that because they are all long-term projects, the sustainability of that project is dependent on your ability to communicate, right, values and sense of place. And because architecture is an expression of, is a symbolic abstraction of societal value, it is important, that this is expressed expressly in every P3 project. Now, to give an example of this, one place you can see this obvious connection between architectural expression and societal values is in the fall of the Berlin Wall. When in 1989, right, transparency was very important, to the German population, and the concept of a transparent state was very seductive. And because that transparent state was very important, when most architectural projects and P3 projects that took place, in Germany during that period had to reflect that societal value of transparency. And one place you actually see that is in the design of, the German parliament, which is the Reichstag, right? And which was done by Norman Foster, a British architect. Because of that transparency, right, the Reichstag dome was completely made up of glass and 360-degree view of Berlin. And I'm trying to show this, that there's a connection between what we call our values and what we actually, see and reflect in the architecture, right, that we provide. So when visitors walk inside the dome, right, they're able to see the double helix spiral ramps, and, the debating chambers is actually on that, can be seen, right, below. And that actually, interestingly, created a lot of problem for the German, politicians, because every time the debating chamber is actually quite empty, everyone thinks that the members of parliament were not working. They had to do a lot of education, public education, or, awareness to say, look, members of parliament sit on committees, they have all sorts of things that they do, so they don't always, 24 hours debate in the chambers there, which was actually quite interesting. So I'm going to skip through a whole lot of this because I kind of wanted to provide background, but what I was trying to, look at is there are a lot of public-private partnership, that has happened in various forms, and some of them express a lot of value. The Sydney Opera House is definitely, a masterpiece, that communicates something that is very important to the Australian, Sydney people, and is very expressive. Another example is the Calatrava, City of Arts and Science in Spain, in Valencia in Spain, right? So there are actually a lot of this. Now, architecture embodies, expression, and expression connotes communicative attributes that are inherent in our design. And these are actually some of the bases that make some of the P3s around the world to be very successful. And sometimes these expressions can be considered, loud or noisy, right? Depending on, how it is. So when you talk about loud and noisy, most times as architects, our role in P3 project is almost like we're whispering, while, other times, we whisper the qualities to the finance people that are actually ahead, that some of the projects that you're doing will probably not succeed if you don't, consider some of these aspects. And when I talk about whispering, right, one of the things that I know is that whispers are quite powerful. And whispers remind me of, Muhammad Ali, fight. And many of us know, for instance, in 1971, an undefeated Muhammad Ali faced the heavyweight champion, Joe Frazier. And in what many call fight of the century, after a full grueling 15 rounds, the winner declared Frazier, as the winner, and he defeated the undefeatable Ali at that time. And then come 1973, right, Muhammad Ali faced the heavyweight champion Ken Norton, and just like Frazier did a couple of years before, Norton defeated, Ali, and even breaking Ali's jaw in a 12-round slugfest. And then enter the ring, George Foreman, which many of us here, without giving up our age, are actually quite aware. I mean, like this George Foreman was a menacing, dangerous 6'3", 220-pound, machine that struck terror in the hearts of men, right, who fought for a living at that time. So first, when George Foreman met with Joe Frazier, the first man that beat Ali, George Foreman knocked down Frazier 6 times, before the referee had to stop the fight. Then he met Ken Norton, the second man to beat Ali, and the man broke, Ali's jaw. So George Foreman, right, interestingly, right, really, it really was somebody that was fearful. So when the Rumble in the Jungle was announced in Africa, it was to be an epic battle of ages. George Foreman was, versus Muhammad Ali. And this was way back, yeah, I think it was October 30th, 1974, when that happened. And, that night was, when it finally arrived, most of the people, in Ali's dressing room, the dressing room was so quiet that it's so quiet, like a funeral here, that even Ali, himself had to, ask why everyone was so quiet. Of course, the reason was so clear. Everyone feared for Ali's life. So when this fight started in the beginning, the first round of it, Ali traded punches, and soon, he began to, feel the pounding, right, of George Foreman's, huge arms. And of course, the first round went, and Ali goes back to his corner. What he did was to actually think, through a lot of things. He felt the punishing power of Foreman's punches. And one of the things that happened instrumentally at that moment was Foreman changed, he lets Foreman, to continue to pound his body, and then he changed his strategy. In the 8th round, Ali sees a sliver of opportunity, and in an instant, he did the impossible. He knocks out the mighty George Foreman. But how did he do it? Ali did not beat George Foreman with his fist. He beat him with his mind, with what many call the rope-a-dope tactics. People at the ringside will later recall, right, that Ali was whispering into the ears of George Foreman. Ali was asking George Foreman why he was doing most of his punching with his right hand. He was taunting George Foreman, right? And taunting him, saying he must not have, a left hand. And so, just as Ali's left side was actually starting to go numb, George Foreman's, punches, George Foreman had to change because of the whispers. He changed, to his, to his forehand, and that led, Ali to gain that moment of opportunity. So, the question, here is that I can imagine the $64 million question that on everyone's mind, that what does this anecdotal detour has to do with P3 and the nudging of economic sustainability and stewardship in Nigeria? Well, it's kind of, interesting, that the whispers that Ali did is what, it's a type of nudging. And those little kind of nudging are things that, governments and schools and marketers and people in different parts of the world are actually, using, right, to make, changes. They're using small nudges to gently steer people towards making more positive decisions in their lives. And that's something that we've applied a lot to a lot of P3 projects. With those whispers in Foreman's ears, right, Ali nudged Foreman to make a small change, that earned him the heavyweight title. So the idea of voicing sustainability and stewardship and excellence in Nigeria together in the same breath may sound preposterous, right, to many. But with the knowledge at our disposal, I would like to make an alternative case that, for a people persistently subjected to failures, associated with a sovereign state that looks like a geographical arrangement as Awolowo described Nigeria. And, for a country that is actually well endowed, right, with a lot of resources, there's no reason for us to talk about, what Chidi mentioned as infrastructure deficit, which by the way is actually happening every part, of the world, but the infrastructure deficit in Nigeria is definitely very obvious. So that's why, P3 is definitely something that is very interesting. And the question on our mind is, how can we make, economic sustainability, stewardship, and excellence achieved, in Nigeria when it comes, to P3, that we do? The answer might just be from the lessons from Ali's and Foreman fight, which is, so like Ali did in 1974, I believe that, the government and people of Nigeria can benefit from the use of the power of our own whispers to steer the country and the continent, in the right direction through, good governance, inspired, by lessons from, architectural world. There's a lot, right, to look at. For instance, as architects, there are lessons and, as practitioners in the design industry that we've actually looked at. And some of those lessons, we've actually applied, right? In other words, we know that good design is actually good for P3. So before you submit all your, business case, finance proposals, to Francis and Adesua, and all that, it's always very important to look at, the importance of good design. But we also know that, right, when we nudge good design, right, this is nudging, at its best. And that might just be the answer that Nigeria needs. So let's look at some, real life case studies, here. And I'm going to be very quick, about it because there's so much to share, on this particular topic, but without really going too much into the detail. Stewardship excellence in Canada, Public Works Department is a very good example of case study. This is the department that carries out most of the P3, project in Canada, and I was very fortunate to lead this, the Architecture and Engineering Center of Expertise, for the federal government, for almost about 6 years. And during that time, we did, practically, a case study. We know that public buildings are a reflection of who we are as a community, is actually a physical expression of, the architecture of a nation. This is where a lot of policies are debated. This is actually where a lot of things happen. But at the same time, through several researches, and this is, research, especially in the UK by the defunct Commission for Architecture and Built Environment, right? How buildings perform over time, right, is something that has been looked into, right? We realize that good design is something that make, things work, but good design remain the most reliable prerequisite for achieving best value in any public-private partnership. So the term good design is quite subjective. I'm not going to go into that, but defining it in few words is an uphill task. So for the purpose of this presentation, good design, I'm just generally talking about a balanced combination of efficiency, effectiveness, and economy of means, right? Which my previous panelists have actually talked about. And even though good design is a key predicator of achieving efficient and effective, P3 project, it is not always a guarantee, right? The experience of many communities, is that, a project can be functional with all the quantitative aspect of it, but yet, right, the project, is not really serving, their need. So, projects are founded on good design principles, despite the fact that we know that these are the things that give us best value, right? They are never, a given. And why is that? A glimpse into the field of behavioral science might just help us understand why. Several behavioral economics have actually revealed that, consumers are not always rational in their decisions. So this is not anything that is just associated with a country like Nigeria or Canada or wherever, that we as human beings, we are not rational, right? That when we are given options, most time we gravitate towards, the irrational, aspect, of every option that we're given, and we make poor decisions when provided good options. So based on that, we kind of looked at this Canadian public sector organization that looks at, a public-private partnership, and it's very glaring that this department looks at $7.3 billion, facilities, every year, and the vast majority of the costs, are usually spent in the life cycle, of the project, and several research, and studies have demonstrated that the impact of reducing operation cost, which is actually very important, can be made through, the design process. So when you look at what we're looking at, as architects, when we get involved in P3, we are actually involved in less than 0.5% of the life cycle. However, a lot of the costs in P3s are in, the energy and maintenance, in the construction, in the operations, and the operation.
Sorry to interrupt. How long would you?
Just 5 minutes, and then we'll go. All the other things we'll just go into.
The panel. Yeah. Okay.
Yes. A panel conversation. So I'm kind of laying the groundwork for this whole stewardship, that good design must be valid and deliberately championed. And it's also kind of important that, when we look at scope, cost, and time, right? All these aspects of it are really very important. So if we've always done, things the way we've always done it, we always get what we've always gotten. So, right, it's really very important for us to look at it. Now, when I talk about nudging from behavioral scientists, now this is kind of, laying the groundwork, and I'll kind of connect it, at the end of the day, right? There was an experiment in Schiphol Airport, where we kind of wanted, to address, a persistent problem in the male washrooms, right? Where they have to hire a lot of people, right? To be in there all the time cleaning because of the cleaning standard. And in the male washroom, because, there's always, problems where they have to bring in a lot of people all the time, right? To get that done. Now, in order to solve the problem, they put in people, right, to clean the washroom every time, but men, right, it's always happened.
Samuel, please, can you do it in 2 minutes, please?
Yes,
yeah?
so this is very important, this aspect, right? So because men love to aim, right, we came up with a very interesting, we etched a housefly, right, on the, we hatched a housefly, there, and the housefly that was hatched there, because men love to aim, that solved, the problem. Now that fly that was hatched in the urinal allowed, the men to target, and that solved, the problem. So in Canada, when we did it, we created a nudge, which is called the Stewardship Excellence Protocol, that we use for a lot of P3 projects, and is actually based on a whole lot of protocol, that created it. And in so doing, it created a lot of the projects, that gave rise to the good design, that provided, a whole lot of things. And this is an example of the research lab that, good design did. We can go into the technicalities if there are questions, at the end of the day. But how does this translate to the Nigerian concept? Nudging is not a new concept in Nigeria. Every day we are subjected, to nudges, and we know why we fail. But stewardship is really very important, and we do that. I'm not going to go into this other case study, but I laid the groundwork here, for some of the aspects, insignificant aspect of P3 projects, where we use nudging as a strategy. There are lots of things that we can do to nudge, good design and good aspect of it. We can do the nudges, right, at the end of the day, and we do it. So there are quite a number of projects, that we did. We use all those nudges, right, to nudge, the solution. And I'm submitting to everyone here listening, right, that we can use nudges, right, in P3, just, taking the cues, right, from a lot of things, that we did. And I think I'll answer a lot of questions during the back, because usually there's actually a lot of groundwork, but it's really very important to know that these nudges are, something that is actually, very, very important. And whether is, the Norman and Ali fights, right? There's a lot of lessons that, when we nudge and steer people in the right direction, just like, the Barack Obama administration used it, everybody is actually using these nudges. And in P3 projects, this is an example of a P3 project that we used quite a number of nudges. I can go through all the nudges that we put in place, to get them really, really done. So thank you very much, for your time there. There's a lot of questions. I know I had to rush through a number of some of these concepts, but hopefully we'll be able to answer some of those things, during the question and answer period. Thank you very much.
Thank you, Samir. That was very interesting. And coming from an architectural angle, you've shown us a lot of things and the importance of actually nudging and using our cultural aspect. You've also talked about how to do it sustainably, excellently, and having that stewardship in place, that good design is actually good for PPP or P3, and looking at the importance of good design, and also the importance of researching and how buildings perform over time. Good design is based on efficiency, effectiveness, and economy of need. So it's a key predicator of achieving a P3 project. And it's not always, some projects are not always, even with good design, some projects are not always guaranteed. But what you are trying to tell us, or not just to us, is that we have so much in Nigeria or Africa to use as our design, just like Canada has done. Am I correct? Yeah? Okay.
Yes.
I think there'll be more questions now. The panel, there were quite a few things on the comment box. So we are going to go through that. But I'm going to call on Professor Ebohon, who has a couple of questions and an observation to make. Professor Ebohon.
Yeah. Thank you very much, Mrs. Ahir. It's quite interesting, the range of topics that have been discussed here. I just wanted to point out, first of all, that when we are talking in the context of PPP, we should please realize that there's much to exchange between us and the rest of the world. As Mr. Zua has pointed out, a country where you have such huge infrastructure deficit, the people that have been filling the gap so far is really the private sector. The private sector, no matter how you define it, I think what we are talking about is the public sector, the private sector from a formalized corporate, approach. But when you talk about private sector generally, if you just look at healthcare in Nigeria, just around you, how many private clinics do you find in one hospital? So all those things are already in place. I just come quickly to, and also the last presentation, a lot of people that are not within the built environment may find that very difficult to bring it. I think what was being said here is that in architecture, when you're designing, there are certain key principles that you follow. And those principles have to be brought in that formalizes into a building. For any building has two lives, the physical and the economic life. And if you don't judge them very well, a building can last 200 years. Once a building exhausts its economic life, that building needs to be replaced. And that connects with what Adesua was trying to say earlier on, that there are fundamental questions that are asked beyond the project. How will this project sustain itself in terms of revenue drive and so on and so forth? It's interesting listening to Mr. Izua. It's nice to put a face to him, because there was a significant argument between myself and somebody I had contact recently. I was claiming him to be a Benin. He said, no, he's an Igbo man. I said, how can Izua be an Igbo man? And before he convinced me. And that regards the contact is trying to make regarding some of the projects that they are having in Nigeria on sustainability. And I was contacted as a lead person, so he would know.
Edoho, I think I have to interject here because it's important to establish that my family has solid bona fide Benin roots.
Yeah.
There's a Zuwa street in Benin, and we're not different. But I don't want us to go there because something that happened between me and the other.
Yeah. I look, anyway, we've already claimed you because I know what I talked to Professor Egbu. It was Professor Charles Egbu, that you talked to. But generally, the question I like to ask is this. One, to the first presenter about the MRO project. I wonder which aspect of it he contacted the government. Because as Mr. Izua said, that could have been driven, purely from a private sector perspective. There are people asking if they can go. I don't know whether in terms of infrastructure or licensing and all those kind of stuff. I really don't see how that project has stalled. I joined the conversation late. So I was wondering why he couldn't go full strain, private sector drive generally. And then the other thing for Adesua, I just wanted to know whether it's just the private capital that is provided, whether they go beyond the provision of capital. And in particular, what sort of collateral, do they look at the demand when they are providing this financial assistance to local people. And then Francis talked about 60-40 share. I wondered what they were referring to there, because 60-40 is not just in terms of revenue drive. I think that regards content. And the reason why that 60-40 is there is that PPP, the private sector element of it, is not necessarily targeted as towards foreign direct investment. It's how do you mobilize the private sector in Nigeria to actually begin to see the huge opportunity available to them in terms of infrastructure provision as a venue for investment. Because the idea is, if local people are not participating, then continuity, becomes very, very difficult. In other words, what that 60-40% means, the focus on the private sector in Nigeria is how to move businesses away from current subsistence approach to one of corporate, approach. How do you bring individual companies, amalgamate them to form that kind of discipline that that we are looking for? That's just basically my few questions and observations. And I thank everyone for listening, and also the wonderful caliber of people that you brought to board, and the very importance and significance of this very discussion to Nigerians' development generally.
Thank you, Professor Ebohon. I will just ask Dr. Osahon Nabulele to give his question, and then the panel can then answer. I will give you two minutes, please. Dr. Osahon.
Thank you, Esosa. My questions are already deposited in the chat room. So if you can go through the chat room, I think it may just be good to read them out. Thank you very much. Wonderful.
All right,
wonderful.
Thank you. Yeah, what you've asked is that Chidi gave a very inspirational talk, and he said, can Chidi talk about what the ICROC is doing to give Nigerians uninterrupted power supply, and how soon should they expect this? And then secondly, your question was, hold on 1 minute. Concessioning of roads has not been worthwhile. And then the third was the behemoth of corruption as a major challenge. And also PPP arrangements for mobile clinics is good. What, in my view and from my experience, is more useful is to develop IT compliant primary health care centers. So can I ask the panelists to please?
I also had a question. I also had a question for Adesuwa. If you scroll up.
For Adesuwa, yeah. Yeah, I think in terms of Adesuwa's song was the.
I've seen the question, and
You've seen the question, so you will be able to answer. It was something to do with elitism.
Once you prompt me, I can answer that.
Okay, all right. Please, can you start? Adesuwa, you can start with that, please.
Okay, so thank you, Dr. Osahon, for your question. So with us, I think every player has their part to play within the ecosystem. The part that we play within the ecosystem is specifically for growth capital. So we're looking for companies that have proven their business model and are looking for scale-up capital. That part of the ecosystem is also significantly challenged with regards to access to capital. So that's the part of the ecosystem that we're addressing. You have other funds that also invest seed and also invest greenfield capital. That's just not the stage that we're focused on, because given the certain risks that part of the ecosystem presents. And for us, the mandate that we have from our investors in terms of the risk-reward balance that they want, we've been given the mandate to specifically focus on growth. Having said that, there are a lot of companies that come to us that are not yet ready, We don't just turn them away and say good luck. We try and give them as much advice as we can in terms of what they need to do, in terms of capacity building, in terms of pointing them to other people in our network that may be able to help them in that stage where they are. So, you know, we are, at the end of the day, we want to see the entrepreneurial culture in Nigeria be fostered and not hampered because of the lack of capital. So we play our part in that, in making sure that even if there are businesses that come to us that are not quite ready or not quite suited to our criteria, we try and give them as much advice as we can. We try and give them access to our network. If they need financial advisors, if they need tips in terms of what to include in their presentation. Obviously, we can't do that for everyone, but we try and do it for companies that have potential and one day could be recipients of our capital. So I would say that, you know, everyone has their part to play, and we're playing our part. And I would not say that it's elitist in any way. It's just everyone has their mandate. But on top of that, you know, we try and make sure that, you know, we also play our part in helping those that may not yet be ready become ready at a later stage, and also give them access to our network. So I hope that answers the question. Thank you very much.
In terms of what Professor Ebon talked about Adesua, what is your response?
Sorry, with regards to the question, I think the question he had for me was collateral. If we request collateral, is that correct, sir?
Yeah.
Yeah, I was just wanting to know, in addition to that, whether you provide, I think you responded to that very well in answering it, so that you provide other services beyond capital. That's what actually, yes. But the one on collateral is what I was asking, whether, you know, what the form of collateral do you require from firms, whether you accept local collateral, because one of the biggest problems that I find here talking to other, especially small businesses in Nigeria, is the nature of the collateral that is demanded. I gave you as an example. I mean, when I was in Kenya discussing this issue, a goat farmer, you know, was asked to go and get collateral that he could never obtain, but he was wondering why couldn't his goat, you know, be seen as collateral, as you would do in this part of the world. So I was just thinking, trying to know the nature and kind of collateral you demand when you're advancing this kind of loan.
Thank you very much, sir. So for us, yes, we definitely provide more than just the capital. We are very, very actively hands-on involved operationally in the business. And the reason for that is because we actually don't provide debt, we provide equity. So with equity, we don't actually require any collateral from these businesses. We make sure that we do our due diligence on the sponsor and on the entrepreneur that we're backing. We make sure that we're comfortable in terms of the cash flows of the business. We make sure that we're comfortable with the growth prospects of the business. So our model is a little bit different from a bank, where a bank will require collateral, a bank will require, you know, everything, your mom's house, your house, everything. We don't require that. All that we require is we typically take board seats. So we have voting board seats on the company's board. We typically have our portfolio managers actually sitting within the company. We may put our own CFO in the company. So we're much more actively involved than a bank, but because we don't have those same collateral requirements. So for us, it's really about getting comfortable with the sponsor, getting comfortable with the prospects of the business, and making sure that the sponsor is willing to bring us on as partners and willing to institutionalize their business with the view of that. Because bringing on institutional capital is very, very different to taking on a loan from a bank. So we need to make sure that we have like-minded partners that are ready to go on that long-term journey with us, because our capital is in the company for 4 years, 5 years. It's not a loan that is paid back after a year or 2 years. So it's a marriage, is what I always say to our entrepreneurs. So we have to make sure that we're very, very comfortable with each other, because the collateral is not something that we require.
Thank you. Engineer Chidi, please, can you answer the questions posed by Professor Obo?
I will just rush through the questions because of time efficiency. I think somebody posted on there that why is government not doing infrastructure in Nigeria? It's government's responsibility. I think there is a mistake many of us make. And frankly, I know I'm a very proud Nigerian, but I think we need to understand that our country is not a rich country. I mean, our pre-COVID budget, government budget is only 7% of our GDP. So what drives this economy is not government spend. It's private sector spend, just like Professor has said. Our pre-COVID budget is $22 billion for a country of 200 million people. NYPD, the police department of New York, you know what their budget for 2020 is? $6 billion. Just the New York Police Department. So you can do the maths yourself and see where, oil, which is the largest, revenue earner for us. We produce, basically, assuming we do 2 million barrels a day, which is not our OPEC quota. What it comes to, if you divide it by 200 million people, it's 100 naira per person. And I don't think that's enough to buy any meal. So I think we need to understand there are significant limitations in terms of the fiscals. The only way and if you look at the National Integrated Infrastructure Master Plan, we need to spend about $3 trillion over 30 years just to raise our stock to 70% of our comparator nations. That comes close to $40 billion annually. The money doesn't exist, in the public sector. So we need to go to where the money is to be able to sort of have projects and do it. Professor, the first question Prof asked was about corruption. One of the reasons that funds corruption in Nigeria is public contracts. That's how elections are funded and everything, because of the incentive structure. What PPPs does is that PPPs dramatically changes the incentive structure. That people get paid for services. And Francis will tell you, if you're going to, Adesua will tell you, if you're going to somebody like Adesua to take equity, to put on a project, Adesua's, engineers will be looking at it, lenders will be looking at it. You go to banks, nobody borrows money to go and pay a bribe. No investor will go and take money to pay a bribe. It won't happen. So if you really want, corruption to stop in Nigerian public works, you need to dramatically move, to PPP. He asked another question about concession of roads. What I want to explain is that the problem we've had is that the Lekki Toll Road, which didn't work, the Lekki Toll Road was a bad route to concession because Lekki is what you call a peri-urban road. And when I was consulted on that road, I looked at the traffic. The traffic on Lekki is lifeline traffic. So any road that has close to 70% lifeline traffic, please don't concession it. What is lifeline traffic? Lifeline traffic is people who are doing mandatory journeys, people going to work and coming home, people going to drop their children at school. Any toll on that road is a tax on their income. Because, assuming that you're taking your child to school and then your child gets after the toll and says, Daddy, I forgot my bag, then you will turn back, pay toll, go to your house, get the bag, and you will pass to protest. The roads we are tolling now are roads that have value. They have economic value. All the journeys have it's not lifeline traffic, it's economic journeys. And people will pay, for improved. And we've done all the studies and done all the origin destination studies and done the traffic counts to demonstrate, the viability of, those routes to do. One other question that was asked was, the thing about uninterrupted power. The thing on interrupted power is that ICRC, what government did, government decided, and this is the point that unfortunately anywhere else in the world, power is economic infrastructure. But because of our per capita income, power seems to look like a social infrastructure here. The tariffs are subsidized. When you have a PPP, people must have cost-reflective tariffs. So that is the issue. But because of water rights, our dams are concession. Kainji is concession, Shiroro is concession, Jaba is concession, Gurera is concession, and they're doing very well. And those are easy ones to manage because there is a PPA, where the the money is paid. The last thing I wanted to talk about is that it's not just about money that you go into PPPs, because what you go into PPP is mainly to, apart from capital, private sector expertise, private sector innovation, the innovation that drives the sort of thing our brother architect talked about. And then you just look at what private capital has done in the telecom sector for us. Just imagine if we were stuck with NITO. That's exactly what private capital will do with infrastructure in Nigeria, to bring it over the life cycle. Because it's not just building the infrastructure, but operating and maintaining the infrastructure over its life cycle. Because the problem very often in Nigeria is not that we don't build. Because what I tell people is that very often for public works in Nigeria, the philosophy is build, abandon, rebuild. You build a road, you don't maintain it. After 30 years, the road is completely gone, and then you want to build a new one. The cheapest way to maintain infrastructure or to build it is to maintain it. You have roads in Europe that are 50 years old. You have bridges which are very well maintained. So bringing private capital over the life cycle is very key. Those are some of the questions I felt that were answered. I think I tried to.
Thank you. I think because of the time, Francis, I'm going to call you, please, 2 minutes so that I can get 2, 3 other people to come. Kede, Mrs. Ezenwa, and Sam. But
no,
first of all,
I just want to say that some of the things that I'm talking about are posted. I posted the.
Yes, and thank you very much. Thank you very much. Francis, please, 2 minutes. Francis.
Yes.
Respond to Professor Ebohon.
In respect to, in respect to which question? So I haven't actually got it.
In respect of what Chidi said about your project, the MRO project.
Oh, good heavens. Chidi has said quite a few things about my project.
No.
2 minutes, please.
Well, there are 2 things which I would say to that. One is a positive and one is a negative. The positive is, I of course I commend him. I agree. There is a law and regulation which we should all abide by and which we should all follow. And he's quite right. He's quite right in saying it's important to follow that, because one of the things which you find is that a governor will come, sign an MOU or sign this, we will leave, and then a new one will come and will renege upon it, and that just leaves a negative impact with international investors, and that is not to be accepted at all. And if following the guidelines which he stipulates is to be will prevent that, then I welcome that. But then I fear that even with all that, that the government can still come in and revoke, and that's something which I wanted to stress originally in my talk. That's the negative aspect. One positive aspect, which I think that Chidi has mentioned, and I think I loved it when he actually said that, and I want to stress it over and over and over again, is the domestic capital market.
Okay.
P, P3, 3P. One thing we learned from Canadian model, and my brother is absolutely right, Canada is the home of P3s, 3Ps, PPP, is they've used their capital market with such efficiency. You do not raise long-term funding in the banking market. You just do not. It is expensive, it is inefficient, and it's wrong. The maximum you get 7, 15, maximum 15 even if you're lucky. The place to raise long-term funding is the capital market, the bonds, where you have 25 years, 30 years, 40 years financing, money being raised. And that's how Canada was able to succeed. And I've been drumming on and on and on for the past 15 years to Nigeria. We should improve our domestic capital market to actually pay. So I commend you on that.
Thank you very much. So improve our domestic capital market. Mrs. Ezenwa, please, 1 minute.
Yeah. Thank you, Chidi, for that inspiring presentation. However, none of the presenters have told us what to do with trust deficit in Nigeria. I'm worried because that is one of the things that is making it impossible for PPP or any business venture, joint capital ventures or equity, whatever, to work. Trust deficit. Thank you.
Okay, thank you. Kede, quickly, 1 minute. Yeah.
Well, quick one. I just wanted Chidi to talk about Azura Power Plant. I think that's how we met actually during the World Bank project about 5 years ago. It's one of the best models actually as a case study of the PPP that works. With that model, the available today, knowing what we know now with the complaints, and that comes to what Madam is saying about trust deficit. Why would the politicians be complaining about a successful model and looking for problems where there are no problems?
Thank you. Sam, 1 minute. Sam.
Yeah, good afternoon, everybody. Chidi, just a quick question. Following our discussion, our cited meeting last year in South Africa at the African Investment Forum, I did have a discussion with you after I introduced you to Kola Karim. And I did ask you if you have, or the federal government of Nigeria have, one exciting project that is ripe for investment, that is extremely close to the heart of the president, that we can quickly get our team to come in and do this project.
Thank you. So I think what is going to happen now is I'm going to give a minute each to each speaker. There's the question on trust deficit in Nigeria. There is the Azura power plant model, and then there's innovation. Sam, if I can get you to please quickly talk for, not Samuel Obo, you can quickly talk for 2 minutes about innovation.
Well,
thank you. Yeah.
Okay, thank you. I'm actually glad, that Francis says something that is really very cogent, and that is, the domestic capital market. And as a layman, my interpretation of the domestic capital market is actually the domestic potential. The whole idea of actually looking towards foreign, sources of funding is something that I think in terms of innovation, when you talk about innovation, we have to be creative about innovation. What I tried, to talk about, the whole concept of nudging, at some point in time, I think I'll share my presentation for people to actually go through what nudging
we will share with people who have attended today.
Yeah.
Your presentation, yeah.
Yes. So the whole thing, there is actually a connection with innovation. And I think, Chidi, I'm really glad to hear what you guys are doing. The concentration on the local market. So some very subtle aspects that we don't pay attention to can address the whole trust deficits, that Mrs. Ezinwa was asking about, right? When you nudge people, if we create nudges, for instance, using IT technology to make it very difficult, for people to do certain things, those IT technology is a nudge that steers people in the right direction. If you create the kind of systems, right, that you have in place, right, that before any P3, right, is actually something that is really very important. I'm glad to hear that a lot of, analysis and studies are being done to see the viability of projects. If those analysis and viability impact studies are actually not done, those are actually nudges, right? That steers people in the right direction. So trust is something that, will actually evolve, but you need that kind of innovation. You have to look into the Nigerian system to come up with innovation. Very good example. I don't know how many people can remember the option A4 system of voting in Nigeria. The option A4 system of voting was a Nigerian solution to dealing with election, tampering. It worked, and it worked very well, but yet it's never been used anymore because everyone knows that it works, because it takes into account the Nigerian side. Same thing in the P3 world. You can actually do a lot of things that is Nigerian made, locally made, right? Because the government is the least spender. The big spenders in Nigeria is actually the private and informal sector of the economy. So how do we nudge them and steer them in the right direction? Thank you.
All right, thank you. Francis.
No,
1 minute. Oh, Chidi, sorry, Chidi, please, yeah.
Okay, I'd have to sort of, speak at the speed of light. I mean, the first one, about the garden project, what our law requires is for us to advertise our projects, and that's what we do. And I've just posted the advert. I mean, the depot system is very close to the heart of the president. He was Minister for Petroleum and actually built the depot system. So anybody can, it's competitive. We don't discuss with individuals, because if we do that, that would sort of run foul to the law. Azura, the problem with the power sector in Nigeria is liquidity. Until we solve the liquidity problem with the power sector and convince Nigerians to be willing to pay cost-reflective tariff for power, it will be difficult to attract investment to the power sector. Subsidies don't work. Subsidies encourage corruption. That is one. The third one, Canada, we have learned a lot from Canada. In fact, Mark Romoff, who is the head of the P3 Council in Canada, is my personal friend. The RFP process, which we use now, is purely Canadian. One thing we want to do is also, what we're struggling to do is to get what the Canadians do, which is to get financiers to bid with the consortium. Because once you can do that, you will reach rapid financial close. Because as part of the bidding process, you're actually going through the term sheets and the financing structure. So we would get to that level. The debt capital market is very, very, very key, for us to move our country forward. We have pools of savings. Our pension funds is huge. Insurance funds. We now need to create the instruments, to attract those local savings, to put them into infrastructure. Because pension funds and insurance companies don't understand infrastructure. They will not invest directly. So you need to create the ecosystem and securities which are protected to allow them,
okay, thank you. Adesua,
the last
have
point
you
is
finished?
the point on trust.
Okay.
No, the last point is the point on trust. It's very important. The point in trust is we need to run a society with consequences. The Americans have told me, trust in God, but lock your car. You cannot have a situation where people drive against traffic and then there's no consequence. The only way you can have, that's why the contracts we have consequences. If you don't do what it is there, you will face the consequences. And no contract that is PPP in Nigeria has been cancelled. MOUs get cancelled, but anything that goes through FEC, if it is bad or not, I will put my foot down and say, deal with the person who signed it. Government has to face the consequences of what it is. If you allow it to go to FEC and get approved, then it is, done and done. Thank you very much.
Okay, thank you very much, Chidi. Adesua, 1 minute, please.
Thank you. So I guess these are kind of closing remarks. I think my fellow panelists have said pretty much everything that I want to say. But I think for me, I think looking to alternative financing options is something that I would encourage everyone to do. There are other options over and above just the banking system. So thinking through, what type of capital does this project actually need? What is the cash flow profile? How can I enhance my ownership by thinking through alternative structures? I would say that's something that I would encourage everyone to do. On the trust side, I think that that's just the reality that we face in Nigeria and also across Africa. But there are mechanisms, through MIGA, through the African Guarantee Fund, there are mechanisms in place that can help to guarantee projects, that can help to provide that layer of trust that sometimes international investors may require. So I would say look into those as well as you're thinking through your projects. Something that us as investors, we like to see as well is skin in the game, whether that's money, time, research. We like to see that exactly your project from the back of your hand, and if you also put some of your own money where your mouth is, that will also alleviate some of those concerns with regards to the trust layer as well. So those would be my kind of my rounding up points: is look for alternative financing options. Know exactly what your cash flow profile is and exactly the type of capital that the project requires. It's not always one size fits all. And then also there are mechanisms out there, MIGA, African Guarantee Fund, that is willing to guarantee infrastructure projects. And then thirdly, skin in the game by the sponsor, whether that is, sweat equity or, just, having a very, very good information package where your project inside out, that also will bode well for investors. So thank you very much, everyone, and thank you to Mr. and Mrs. Aher for the invitation.
Thank you very much.
Yeah. Please.
Francis, please. 1 minute. I will. Anything else?
The only thing I have to say is really is on the trust element. Yeah. I think my fellow speakers have actually mentioned a great deal about it. Trust always starts with oneself. I mean, we always forget that. And judging from the panelists, yeah, I'm very, very optimistic. So I think the new breed of talents who are out there, who are questioning the old ways. The old ways were not the right ways. And that gives me a great deal of hope. I mean, Adesua is a living example, an example here. So that gives me a great deal of encouragement. The other thing I like as well, just one last important, is our institutions. The legislature, the judiciary, that's extremely important. Certainty of contract, that is extremely important. These institutions which we have, they give foreign investors confidence that contracts will be honored. Because at the end of the day, they want their money back. If you look at the end, things go bad, you go to court, you want to make sure that the court will interpret in such a way in which you get your money back. So, and that builds trust, that builds confidence, and that brings prosperity. Thank you very much, all.
Yeah.
Thank you, Francis. Yeah. Professor Abon, you said you wanted to say something to.
Yeah, just quick. Yes, please, just quickly. I think the question asked by Mrs. Eziwa is very, very critical. Trust is a two-way thing, and quite rightly so. All the speakers so far, they've interpreted trust in a very interesting way because they are all investors and deal in the capital world. I think there's another aspect of Mrs. Nziwa's question on trust, because, and this goes to Chidi, you need public support to be able to carry this through. What measures are you putting in place? Because we are transferring public capital, we are transferring public monopoly into private monopoly in some of the key infrastructural aspects that you are talking about. What measures do we have in place to make sure that the trust between the public and the private is not breached? If I can just give you one little example of the electricity when they brought the BIDCO in. As I'm telling you now, I'm paying electricity charges in Nigeria when there's no electricity to my house. There is no meter. The meter is there. And the only reason why I'm having to pay those electricity bills, they say it's estimated, is because they threaten to come and remove, the meter, which is very difficult, to obtain. So trust is between the investors and the public, and also there's also a trust that the private capital will also deliver, to the public sector as well.
Thank you. Chidi, please, quickly, 1 minute.
No, I explained that point. We go through a competitive open process and we do public consultation. So I think the important thing that is very key about the trust is that we build the support with the people. We go across all the stakeholders and get their buy-in. The national policy was consulted across people. I just talked about the rules. And also what is very key is at the end of the day, ensuring that these services are affordable and that the prices are regulated in a such that it doesn't exploit it, which is the reason why my preference for the power sector was concessioning rather than privatization. Because once you privatize, you lose control in terms of what you hand over to the private sector. So that's essentially what has happened. But once you, it's like what we have concession with hydro and everything. We regularly go there and make sure things are done in line with the contract. And there is significant contractual control in terms of the role of government over the life cycle of the transaction. That's the power PPPs have over transactions. And it's a better way to go for a country. Because of, you've seen it in Canada, you've seen it everywhere in the world, that PPPs have worked very well, giving the public sector the mechanism to bring in private investment in a controlled and regulated manner to provide services. That's what I would say about that. And people have to behave in a trustworthy manner. There have to be consequences for it. You cannot have a society where people drive against traffic and have no consequences. Consequences in the UK where you are, you will not try that because you know the consequences. You would also not take a fake money to go to the, because you know the consequences. So we need consequences like, Francis have talked about, and contract sanctity. Those are very key.
Yeah, I was just trying to find out whether you have penalties in place if the services promised are not delivered. You made mention of the telecommunications. Why do I have to go with 5 mobile phones in Nigeria? When I have credit in them, I will buy the recharge card and I can't make call, I can't use them. These are some of the things that we are talking. I employ the use of the private sector. Very much so I support it. What I'm saying is that as we are going along, because we have very weak institutions to hold the private sector to account if they don't deliver, we need to build this into the system. You need to have a measure by which you can hold these private companies into account if they are not delivering what they entered into.
Thank you, Professor Bon. I think because of the time, there will be lots of opportunities for us to deal with this more in detail, because this will be on a regular basis, on a monthly basis.
Just a point. I think it's important that we draw the difference between privatization and PPPs. And I think that's what we do very often, that we confuse. When you do a privatization, government control over the service is not as good as in a PPP. In a PPP, there are contractual requirements. Government has obligation. It's a partnership. Government has got better control over the life cycle. That is what has happened with the telecoms, sector. You wouldn't find that with the roads that we're doing, because there are consequences which are embedded into the contract. And ICRC, as a regulatory agency, exists for nothing. We have a full department called contract compliance. We have a director who is responsible for contract compliance. So unfortunately, what has happened to us now is that we have not been able to do it because of COVID. So essentially, but also those services are not going, because of COVID. But however, once COVID goes, the contract compliance department is well funded to ensure enforcement of contract requirements.
Thank you very much. I would like to call on Kade now to give the vote of thanks.
Well, I don't even know where to start from. I would say thank you to everyone that has spoken, and it's been a very fruitful discussion. We're going to take a lot from this discussion and improve on them and ensure that people, sorry, there's an echo in here, that people get this kind of feedback from us, but it's a continuous exercise, and yes, time well spent. So thank you very much for everyone, and have a very blessed weekend. God bless you. Thank you.
Thank you very much. We'll be back next month. Please send us your feedbacks, and thank you very much to our speakers and to everyone who has participated today. Next month, we're going to come up with something else, but it's everything about sustainable economic sustainability. So thank you, everyone, and have a good weekend. Bye.